There's a little monkey named Bob. He's 1 year old. He wants to go to the fun fair. His mom gives him 10 ringgit. The annual pass is 3 ringgit. He also has to pay 2 ringgit for an AI helper to assist him because he's too young. He has a balance of 5 ringgit, so he saves it. Bob goes there every year until he turns 10. He has saved a total of 50 ringgit in these 10 years. Bob is turning 11 now. He wants to go to a bigger fun fair. Now he doesn't need an AI helper anymore, but the price of the annual pass has increased. It's now 4 ringgit and will be increased by 1 ringgit every year. From 4 ringgit to 5 ringgit, 6 ringgit, 7 ringgit, 8 ringgit, 9 ringgit, and 10 ringgit. At the age of 18, Mom's money of 10 ringgit is no longer enough, and he is using his own savings to pay the shortfall. He takes 1 ringgit, 2 ringgit, and 3 ringgit. Let's see Bob's savings now. He has saved a total of 65 ringgit. Bob has turned 21. He wants to go to a bigger and better theme park. The annual pass is now 14 ringgit and will be increased by 2 ringgit every year. From 14 ringgit to 16 ringgit, 18 ringgit, 20 ringgit, 22 ringgit. At the age of 25, he has only 25 ringgit left in his savings. So he decides to ask more money from Mom. The annual pass will be increased by 3 ringgit from now on. It's 25 ringgit to 28 ringgit, 31 ringgit, 34 ringgit, and 37 ringgit. How much does he have to ask from Mom every year to go to the fun fair until the age of 30? It's 26 ringgit. Mom needs to give him 26 ringgit yearly, so Bob can go to the theme park until the age of 30. Now we'll see what happens throughout these 30 years. Mom gives 10 ringgit for the first 25 years. Each green block indicates 1 year. There's a total of 25 blocks here. In the last 5 years, Mom gives 26 ringgit. Next, this chart tells us how much Bob spent on the theme park. In the first 10 years, the annual pass remains at the same price of 3 ringgit, with 2 ringgit for the rental of an AI helper. In the next 20 years, the AI helper isn't needed, but the price of the annual pass kept increasing, especially in the last 5 years. Lastly, this chart is to show Bob's savings. In the first 16 years, Bob's savings increased, but in the next 14 years, he had to spend all of it. So looking at Bob going to the theme park, this is the basic concept of how investment-linked policies work. In short, we call it ILP. Mom's money is the premium we pay. The annual pass is the insurance charge. The fund Bob had in the theme park is the protection we get from the insurance company. And Bob's savings are the policy cash value. Earlier we saw Mom's money is the premium we pay. Premium will be leveled up at a later age, or we could increase our premium at a higher rate at the beginning to maintain the same premium throughout the same term of coverage. The annual pass is the insurance charge. The insurance charge is determined by the risk. The risk factors are age, gender, occupation risk, health risk, and more. For example, the older the age, the higher the risk. Thus, the higher the insurance charge. Bob's savings are the policy cash value. Policy cash value is to sustain the policy with the same premium over the terms that we want. In the early stage of ILP, the premium is calculated based on the protections we want. Because the protections carry the insurance charge, they will be deducted from the premium. And after deducting other charges, the balance of the premium is cash value. Within the same premium, we could also choose more protections and less cash value. It is rather flexible. Many years later, when the insurance charge is larger than the regular premium, the accumulated cash value is required to withdraw partial funds to sustain the policy. When all cash value has been exhausted, the policy will be lapsed. Alternatively, we could increase the regular premium to sustain the policy. Let's make some crucial conclusions here. First, the insurance charge is increased over the years. Second, policy cash value is to be deducted in the future. Third, premium will be affected by insurance charges. In the next episode, we will go further in depth of ILP. Thanks for watching.